Welcome, Rodney Miller, to Wealth Matters podcast. How are you, Rodney?
Doing good. Thanks for having me.
Absolutely. We have been chatting about this for a while. Where
Yes,
are
we
you?
have.
Where are you today? Hometown or traveling?
No, I got back last night from Indianapolis. I am back in Oklahoma City.
Oh, awesome. And we'll talk about that as well on the podcast. So, what's your main job or business? What do you do?
I have been self-employed since 1994. I'm 54, and so when I was 27, I
I
had
like that.
I had a chance to buy some medical clinics. I'm not a doctor, but I
That's
bought it.
interesting.
Yeah, it is interesting. And I bought into a clinic in Oklahoma. I lived in Texas and moved up to Oklahoma, and kind of ran it for a year, then moved back to Texas and drove up every week because I liked living in Texas. And
Oh, okay.
yeah, and then I
So,
got married after a while, and then she got tired of me leaving, so we just moved the family up here. And
I see. So, where in Texas?
I grew up in Dallas and Houston,
Oh, okay. Okay.
both. Yeah, I kind of moved back and forth my whole
Not
life.
too far from OKC.
Yeah, 3 hour drive from Dallas
Right.
to OKC, and so I got family there, and we go back a lot, and we'll probably wind up back there when the kids get out of school.
Right.
I moved up here to Oklahoma City. I told my wife, I was like, we'll do it on a 5 year plan. We'll buy some rent houses, we'll build a clinic up and sell it, and then we'll move back to Dallas. And that was 15 years ago. So,
I was going to ask how long has that been?
yeah, the plan didn't go as it didn't go right, but
Yeah.
we're gonna get there. It might be 20 years. So
Yeah.
I was 15 years off.
As long as it's working out for you, it doesn't matter, right?
Nah, we like it here.
So
We
that's
made a lot of good
that's
friends,
the
and the
goal,
schools,
right?
and the kids are dug in here. So we'll just let them get out of school, and we'll maybe move back. So.
So what inspired you to become an entrepreneur or business owner? Or what made you decide that I want to be self-employed or I want to buy this clinic?
Because I was a terrible employee from the start. I started working when I was 12 for other
Wow.
for other people. I started washing dishes for $1.65 an hour
That's
and,
awesome.
and did stuff like that, and then sacked groceries and did all kinds of weird jobs. But we always I wasn't really great at sports, so I just went and started working because I wanted to make money. And
Yeah.
anyway, I went to college and got my degree and got a business degree, and then went to work for an insurance company and just couldn't stand it. I was there for about 4 to 5 years. And I sat in a cubicle all day and took complaints from people and had to wear a tie. And you know how it is. And I would work 2 hours late, but if I came in 15 minutes late, the next morning, they would get on my butt.
Right,
Didn't
right.
like that corporate
Yeah, if
vibe.
someone asked me to wear a jacket and a tie, I'm resigning for sure.
Exactly. That's enough just to turn me on right there. So I did that, but I was always looking for my out. I was always looking for my way to get out. And I didn't know what I was going to do, but I was always looking for opportunity, always looking for something. And so these chiropractors used to take me to lunch, because I used to handle their claims. And they seemed to make a lot of money. They wore suits and they drove Mercedes, and they would wine and dine me so they could get more business from me. And
Right.
so I decided I wanted to be a chiropractor, and I looked into school, and it's going to be like a lot more school and cost a lot of money. So
Yes, and it's gonna take a lot of time too.
yeah, and so I did the next best thing. I found a guy getting out of chiropractic school, and I said, "Let's partner up. I know the business part, and you're a chiropractor." And he had never owned anything or never worked for anybody, and so just two young and dumb guys, and we just said, "Let's do it." And when he agreed to it, I wrote up my 2 weeks notice and turned it in and said, "I'm done."
That's
And
amazing, man. So,
yeah,
so,
there,
so
you
you
know,
are an action taker pretty much, right? And you could see the opportunity that okay, someone is getting out of the school. They don't know what to do other than working for someone else. So you sense that opportunity and jumped right in. That's
yeah, and I think you know I was just stupid. I didn't know any better, so I just went for it. So we decided we were going to start our own clinic, and we had about $20,000 between us, and we were just too dumb to know that we didn't have enough money to start a clinic, and so my partner couldn't get his license in Texas. He kept flunking the boards, and so I was like, "Where can you get your license?" He said, "Well, Oklahoma's easy," and I was like, "Well, go for it."
Let's go.
He got his license in Oklahoma, so we packed up a car and just drove to Oklahoma and bought a little apartment. We shared the apartment, shared a car, and worked on starting our clinic. And then we found out it wasn't that easy. And so we started spending our 20,000 we were going to put down on, on our business.
Crazy.
And we almost ran out of money and started freaking out. I started thinking I was going to find another job. And then this is kind of where opportunity meets. Sometimes you got to go for it, and sometimes you get lucky. But we found out that this guy was going to sell his practice. He's an older guy, and he was going to retire. And so we went and talked to him, and he wanted a couple $100,000 for it. We didn't have that, of course, but we talked him into financing it with 20,000 down. So we had to go out and find some more money, but he financed it for us over 10 years with 20,000 down. We got into practice. 2 years later, I bought my partner out and just hired a chiropractor, and it was a chiropractic clinic. And then fast forward to today, we've got 2 medical doctors on staff, 2 chiropractors. And, we had a staff of 30, and then we kind of whittled it down. But we're trying to build a chain of clinics here in Oklahoma City, more driven by the medical doctors. So started off really small, and we just kept growing it, and it kept getting better and better. And that's kind of where I'm at today.
That is very interesting.
Yeah.
It's an interesting story. Because when you mentioned about medical clinic, I'm like, what? How?
Yeah. Everybody's like, always like, what do you do? I own medical clinics. And they're like, oh, hey, how's the medical business, doctor? I'm like, I'm not a doctor. And they look at me funny. So you rent the next thing is like, they're like, so you rent the building to the doctor? And I'm like, no, I own the clinic. The doctor works for me. We pay him a salary, and then we work him as hard as we can to get profit out of him.
That's interesting.
And that's kind of how it works. So a lot of states won't allow you to do that. Oklahoma's kind of a corporate medicine state.
Okay.
You can own a practice here and not be a doctor.
I
Yep.
see.
Those quirky little things.
Yeah, all the states are so different, especially, and I'm in California, and it's even trickier and pretty stricter than other states. That's what I've heard.
Yeah, Texas is the same way. They got a really strict rule to get into the medical business. There's workarounds. You can always do the doctor owns the practice, but you do a management practice deal contract with it, or you suck all the profit out of it. So there are workarounds, and I see people doing it, but it's just easier here in Oklahoma.
So let me change the track. So it seems you are already doing good with your medical practice. Then how and why would you look into real estate, right? So what was your reasoning to move into real estate, and what are you doing with real estate right now?
Great question. So when I hit about 40 years old, I realized I had no retirement, and I kind of freaked out. And so, you could sell the business someday or whatever.
Right.
But, I want to retire really nice. And so I just kind of had a little midlife crisis, I guess you'd call it. And my dad retired at 55. So I was like, damn, that's right around the corner, and I have nothing. And so I better figure something out. So, I decided just to go into real estate. I decided to buy houses, single family homes. And so I wanted to learn it. I didn't know anything about houses or anything. So I joined the Home Investors franchise.
Oh, okay.
Those?
Yeah. They're all over. Yep.
Okay. So I was one of the first home investor guys here in Oklahoma. And I bought it right when we moved up here, and kind of learned the ins and outs of buying.
They are the ones who have advertised, we buy ugly houses or something.
Yes. Right? Buys ugly houses. Exactly. And so I did that for a year, and then that was too corporate for me. It was like a job. So I quit it.
Yeah. Franchising is different, even though it feels from outside that you're your own boss, but that's not true.
No, it's not. It's not. And so once again, the corporate world, I just didn't like the corporate thing and having to check all those boxes. So I had learned what I needed to learn. I gave it back to them. They were happy to take it back because I gave them a bunch of money when I bought it. So they just sold it to somebody else, and then just kind of did my own thing.
Another sucker down the corner.
Yeah, exactly. There's another sucker, and he bought it, and now there's like 1,000 of them. And so,
yes.
So anyway, I did that for several years. I got about 100 rental properties here in Oklahoma City that are managed by the clinic manager here manages them, and her husband retired from. He retired from the police force a couple of years ago, and so he's my outside guy. He manages all my rentals outside.
It's perfect, huh?
Yeah, and then she handles all the leases and all that stuff. And so it's been a pretty good deal. And then a couple of years ago, I decided to look into multifamily and really got into multifamily. I've kind of been investing in that. I'm kind of learning the multifamily business. I've been doing it 2 years, but I'm still learning a lot. But we just bought a 100 unit in Pryor, Oklahoma, and we're scouting deals right now in Indianapolis. So
Congrats on that.
yeah,
That's
thank you,
awesome.
thank you.
So can I ask you some questions about what were some of the on your real estate side? What were some of the highs and lows? If you can pick a deal or something which was really crazy, which made you a lot of money, or maybe it was a great buy. And what were some of the low points? In past 10 years since you have started into real estate.
Yeah, on the single family home side, I did the wholesaling thing for a while, and I rehabbed houses, and I wasn't very good at rehab, and I never made the profit I thought I was going to make. So just did really good with buying and holding, and I did a lot of owner finance, rent to own stuff, and we'd buy it
Oh,
for
okay.
yeah, we buy, where I'm in Oklahoma, we buy a house for 30,000, and we'd put 10,000 into it, and then we'd sell it for 80,000, 12% interest over 10 years.
Oh, okay. Okay.
So,
So yeah, pretty much you have done it all from wholesaling to rehabbing, flipping to owner financing.
yes, yes, and
Yeah.
by far the easiest is just that model right there: buying low, fixing it up, and then selling it retail,
Right.
and then the returns are outstanding. And I guess the thing that makes it a home run is I do most of those out of my IRA, so it's
Oh,
a
wow.
Roth. It's all tax
Oh,
free.
so it's Roth IRA, huh? So I just
Yes,
wanna remind my listeners as well that, as Rodney mentioned, that you can acquire real estate in your IRA, and if you have Roth IRA, it's tax free. It's once you put money in, that's it. Then you just need to wait till 59 and a half, and then you can start taking the money out.
absolutely.
All of that is tax free.
That seemed really far off a while back, but I'm getting really close to 59. So
And you're ready.
I'm ready to take it. Give it to me. So yeah, one thing I could tell you one thing that was kind of not was kind of a fail on my part is I started investing in private equity out of my Roth IRA. So I started investing in some of these apartment syndications out of my IRA. But after doing a few deals, you ask these guys when they're raising capital all the time about the IRA, and they're like, "Oh yeah, yeah," and you ask, "Well,
Yes, they always say yes.
tell me about the UBIT tax and all that." "Oh, I don't know. Talk to your CPA." Not,
Yeah,
I don't know.
yeah.
Talk to CPA. Well,
Oh,
I found out that it's 37% UBIT tax when
ooh,
you're investing in private equity with any debt attached to it. So that was a failure on my part by not doing enough due diligence.
wow.
And so now I'm looking at self-directing the company 401k.
So
So
that's exactly what I do.
okay,
Because I
good.
realized about self-directed IRA, and of course, you and I are business owners. So I just started my solo 401k a couple years ago, and that's what mostly I use to, invest into the syndications.
Yes. So you
Just
you were smarter than me. I had to learn the hard way, and
yeah,
finally, I should have asked the questions before I did it, but I went.
yeah, that's it. They always say yes, and then I started reading, and I'm like, "You, what is this UBIT? What is this UDFI?" Right?
Yeah,
I
yeah,
digging into it, and I realized, oh, I'm able to do solo 401k. Why not? And
sure.
even solo has even more advantages. Like I can loan myself 50 grand, right? Up to 50 grand easily,
Yes.
right? So there were other advantages too. So it was a no brainer.
Isn't it funny though? You ask these people and they're like, "Oh, I just talked to your CPA," or "Oh, you
Yeah.
bet, yeah, it's nothing. Don't even worry about that.
Right.
It's
Yeah.
not gonna be a big deal. It won't make a difference." And you look at it and you're like, "That is a big deal." And
That
maybe
is.
you should have told me that before I
Yeah.
invest my money in your deal. But nobody wants to talk about it. So,
No.
but
Uh,
yeah, so I can't do the solo 401k because I have employees. So
right. If you have employees, you can't. Yep.
I'm looking at self-directing our company 401k, which is a
Yes.
whole nother animal. So I'm talking to people about that. I don't know if it'd be doable or not, but that's something I'm looking into now.
Cool. That's awesome. So, can you provide us one golden nugget or a tool to about being an entrepreneur or business owner? Right. What golden nugget, or if you are using a tool and you love it, you can mention that as well.
Man, when you want to do something, find other people that are doing it and hitch your wagon to those guys and provide them some kind of value and find people that are doing what you want to do, and go do that. Don't try to go it alone. I've learned you can you can just short you can collapse the time frames if you'll just
Right.
provide value to somebody that's already doing something you want to do. So many people want to read the books and try to do it on their own, but stuff
Right.
like multifamily and commercial and stuff like that is something you really gotta be part. You gotta find people that are doing what you want to do, and you gotta align yourself with them. That's what's gotten me the furthest, because I used to be, with single family, you kind of operate in a box. You kind of
Yes.
you kind of do things on your own. You might go to those little single family get-togethers or whatever, but it's not really a collaborative business. But when
No.
you get into multifamily, you really need partners, and you need to align yourself with other folks, and it makes a
That's
big difference.
That's a great advice, by the way. And it's so important that, even when I started, I was thinking the same thing. I got to do it on my own. I can learn all of this on my own. I, of course, made mistakes and lost money, and then realized, I can compress my timeline, as you said, by working with others who have already done it. I don't need to reinvent the wheel. These people have already done it. Why can't I leverage their expertise and, of course, provide value to them as well at the same time, right? That's the one way to build relationship, as well as, you want to network with the right people,
Absolutely,
right?
absolutely.
So that's
Just I got three partners in the multifamily, and one guy is just he likes to nerd out on numbers. I hate numbers,
yeah,
and
perfect.
I could throw him 10 deals a day, and he will just love putting that stuff into spreadsheets and cranking it out. And I mean, that's just something I couldn't do myself. So that's one partnership.
And that's so perfect, right? Because you guys have complementary skills now, right?
Absolutely,
And that's
absolutely.
so important. So what are
Absolutely.
you focused on right now? Because I heard you moved from single family to multifamily. So is that your core focus now?
Yeah, yeah, it is my core focus. I stopped buying single families because it's really gotten hard here. I don't know
Yeah.
what it's like there, but in Oklahoma, it's everybody's doing it. It's crazy. I mean, everybody's doing apartments too, but I mean, it's just insane. I can't find deals,
And
and
it's
once you
hard.
see,
Go
go
ahead.
ahead.
It's
Once you
hard to scale up, right? So
It is. Once you see the scalability of multifamily, it just doesn't make sense to do those onesie twosie deals anymore. I'll give you an example. The first deal was a $4 million, 100 unit project in Pryor, Oklahoma, and so we did that deal. Our next deal that we're about to make an offer on is a 335 unit
oh wow.
Minneapolis. It's a $19 million deal. We'll have to raise $5 million for that, and the returns are just, and it'd be the same amount of work that we went through on that 100 unit deal.
Right.
We just have to get comfortable with the capital raise. But everything, I mean, the lenders like it better because we got a better interest rate on it. Property management companies like it better. It's easier to manage. It's just
Right.
it's easier to scale that. And so um, that's what I really love. And, with professional property management, we can do a handful of those a year.
Right.
Um, it just all makes sense.
Yeah, and so that's what I recommend my listeners to. I advise them that you want to diversify. I want to have single family as well in certain markets, but then in other market, I want to invest with syndicators or buy my own multifamily, because you cannot go to every market, right? US has
Yes.
like 20 great markets. So if I'm investing myself in Atlanta, I invest with someone else in Dallas or Vegas or somewhere else, right? So that
Yes.
way I'm also getting diversification not only by asset but also by market.
Exactly. Exactly. And so, yeah, I mean, it just makes sense. It's a scalability factor, and as you get
So
older, time gets more valuable to you, and you want to do things faster and get your places faster. So it took me a while to figure it out. I'm really jealous. I go to some of these multifamily um, conventions and seminar or whatever, and I see
conferences, yep.
20-something-year-olds doing this, and I'm so jealous that I didn't do that when I was their
So
age.
tell me about it.
They figured it out. They're
I
smart.
know.
So I wish I
I,
had done this earlier on. That's my
yeah,
only regret.
I'm with you on that. So, can you share your secret about how you research and pick your markets?
Yeah, we're just looking for the growth markets. We want income growth. We want a rent growth. We want diversified economy is a biggie. We don't want it. We don't want anything that's relying on like a large military base or anything that could.
Like anything one trick pony, how Houston used to be on oil and gas, or
Well, yeah. So we kind of have that here in Oklahoma City.
Mathematics. Yeah,
We have
that's
the
true.
oil and gas economy, and
That's
and so when that gets soft, it can really I mean, you could do good deals here. You gotta know that when you underwrite, you got to be super conservative.
yes.
And we had a lot of people from Dallas Fort Worth that were investing there and came up to Oklahoma City, and got their ass handed to them because they were underwriting like they would a Dallas deal, and it just didn't work. You can't. Most properties here, you
Right.
can't go into a C property and put 3 or 4 thousand per unit into it and get $100 rent bump. You're not going to get it, and so they found that out the hard way. So um, that's really it. Those are the basics. We want a growing economy, and we want a good, diverse economy. We want to make sure that not one industry or one thing can soften the market.
Thanks for sharing that. We'll take a quick break. Thank you. Welcome back. We are chatting with Rodney. Hey, Rodney, I'm glad thank you for sharing about how you pick your markets. So, which markets are you invested in personally, and looking to invest as well, and why?
Well, so my partners were spread out. I'm in Oklahoma City. I've got a partner in Dallas Fort Worth Metro, and I got a partner in Springfield, Missouri.
Hmm.
Um, and so we looked in the Dallas Fort Worth Metro, and there's so much competition there. We're still making
Yes.
offers there, but we can't seem to make anything work.
Every
So
every mom and pop, every multifamily investor wants to acquire in Dallas,
oh yeah,
including me. So yeah.
yeah, yeah. And so I'm sure there are deals there. I see people getting deals, but we haven't been able to make anything work. My partner's actually closer to Fort Worth, but so we are looking in the Oklahoma City. Like the last deal we bought is Pryor, Oklahoma is a small town of 25,000, and it's about 30 minutes east of Tulsa, Oklahoma.
Oh, Tulsa. Okay.
Yeah, and the reason we like that property is because the Google data center was just the Google went in there about 10 years ago and put a data center there, and they've committed to investing 2.5 billion in this little town, and so they're building the infrastructure. Um, they keep growing their facilities there, and they just doubled down on their plans. So we like this little complex that's right next door to it. Everything in that town is 100% occupied, and that does kind of breach the rule of one industry. But we're pretty confident with this Google data center and all the pledges they've made over the next decade or so. So we're pretty comfortable with the rents and getting that property. But we're looking at Tulsa, Oklahoma City. We are looking at Missouri. We're looking in one of our partners has a bunch of stuff in Little Rock, Arkansas, and so we kind of got some feelers out around there. But we just recently decided we were going to look really hard at Indianapolis, and so we just spent a few days there and met a couple of folks there, interviewed property management companies, met with brokers, and so we like that market, and we're taking a hard look there. Hello,
Can you tell me about which market you're looking in Missouri?
Missouri, Kansas City.
Oh, okay. So they are pretty close by then. Pretty much Indy and Kansas City are connected.
Yes, because our property management can be handles both cities. Yes,
Exactly. Yeah.
yes.
So why Indy and Kansas City? Of course, I have interviewed one of the guests on the podcast about Indy market as well as Little Rock market. But can you refresh us on Kansas City and Missouri?
Kansas City is my other partners. He lives close by it. He likes it because it's in his backyard. He's in Springfield, Missouri. Um, And it's a good market. It's kind of, I would say it's kind of on par with Oklahoma City. You're going to be really conservative there. It's not going to be your high
Okay.
rent growth area. It's going to be more of a yield play kind of deal. That's his focus. We haven't gotten a lot out of there. I don't know if stuff's not turning there a lot, but we put that on our radar. But we're monitoring it. We have not got anything there. Indianapolis, we like. We just like the diverse economy. It's very diverse. A lot of high tech stuff going on there. Of course, you got the Indianapolis 500, which we stopped by and
Yep.
watched those cars the other
I
day.
really want to go there, actually.
we were flying out
500.
the airport, and the track is right by there yesterday, and so we just stopped by the track and watched those guys racing around there, getting ready for the race this weekend. That was pretty cool.
Oh, it's this weekend, huh? Yeah, I
Yeah,
really want to go there once over the race weekend. Just want to see the race as well as enjoy the atmosphere.
yeah,
Right.
exactly. So we're just starting to take a close look at Indianapolis, but we like the diverse economy and the rent growth seems to be there. We just like there's not a ton of traffic there in terms of buyers, so we like that it just hasn't really. It's not a DFW market, that's for sure. So
Yeah.
so we're
There is no other market like DFW right now in
yeah,
US.
exactly. And then Oklahoma City, my market, we're watching Oklahoma City and Tulsa. They're pretty similar markets. But we are really just having trouble finding anything that works right now, and we have to be very conservative, just
Right.
for the reason of the oil and gas market. We're one of those. What do you call? Oh gosh, what's the Fannie Mae Freddie Mac? You got to get the second level of authority on a loan.
Oh,
Houston, Texas has it, and we've
right.
got it.
Yes, correct. Yeah, because of
Yes,
dependence on one, type of business, and it's one trick pony.
exactly. Yeah,
Yeah.
exactly. So we have to be really conservative when we're in the right deals here. So that's the only thing. And so a lot of deals don't work out for us. But you always like to get one in your backyard. You can go
Right.
drive
Yeah.
by it and harass the
Please.
property managers and all that. Um, so that's basically where we're looking.
Cool. Anything else you want to chat about, Rodney?
Man, not really. I read it. I'm listening to a really good book you might like, Millionaire. Let's see, what's it called?
Millionaire Next Door or Millionaire Real Estate Investor?
Nope, neither one of those. It's called Millionaire Fast Lane.
Oh, okay. I got to read that one.
Yeah, get that one. It's really good. And the guy just talks about you two, your income sources, getting those up there, which it's hard to get with a W-2 job, but finding a good income source, and then your wealth accelerator, which would be your investments, and getting out of the regular stock market and all that, and getting into high yield investments
Yep.
that they're fairly safe. So it's a really interesting read. It's the guy that I guess his big deal was he figured out a way to um, book limousine service online, and so he took that and made a bunch of money with it, and then started investing that money in
That's
other deals.
interesting. Definitely, I will recommend also listeners to take a look at that book, Millionaire Fastlane.
Yeah,
And
MJ DeMarco is the guy's name, but
oh,
it's a
America.
pretty good listen or read. So
Yeah, no, that's so important what you just brought up from the book, right? Because even if you are a W-2 job, right, you got to look at having more than one income source. I always think about having second, third, fourth, fifth actually income source, right? Because you want to have diversify. You want to diversify your investments as well as have enough income
yeah,
to
yeah,
support you.
and I think it's a great book for young people that are in college, getting out of college, or just starting their careers. It's kind of on par with Rich Dad Poor Dad or Cash Flow
Oh,
Quadrant. It
wow.
just
Wow.
tells you really think about your choices going forward, and don't get in that slow lane W-2 mutual fund.
Right.
I'll get to retire when I'm 70 and it'll be awesome.
Yes.
Don't fall into that. Think outside of that box and think, how can you speed that up? How can you get in the fast lane, and what it takes to think that way. So it's a good mindset book for I would give it to any young person that was kind of looking for their path forward in the future, maybe getting out of
Great.
college or thinking about college or thinking about the alternatives of college, but definitely something that young kids need to listen to. And
Oh, thank you for recommending the book. Uh,
absolutely.
how can my listeners reach out to you?
They can call me 405-204-1715, or they can email me, Rodney at tridentcapital.com.
Absolutely.
Sorry, Rodney at tridentmultifamily.com. I'm sorry. I get that mixed up. Rodney at tridentmultifamily.com.
Okay. Awesome.
And yeah, be
Thank you,
happy to talk
Rodney.
to anybody that wants to talk.
I appreciate you taking time out of your busy schedule today.
Hey, Alpesh, are you famous?
No, I'm trying to be.